So welcome everyone to this A4S webinar on enhancing investor engagement. My name is Elizabeth Toh and I'm the Senior Manager of Sustainability and Accounting at A4S. A warm welcome to you all. Please note that we are recording the webinar for others and it will be made available on the A4S YouTube channel afterwards. The A4S Academy has been running these monthly webinars since May last year, and they are open to both Academy and non-Academy participants, so all are very welcome. Just to run through some ground rules for a productive virtual session, please try to stay as engaged as you can. We have a lot to cover in an hour, so please keep your contributions relevant and help us stay on time. You can ask questions freely in the chat function throughout the webinar. The agenda for today, so after welcome and expectation setting, I will do a quick introduction to the A4S Essential Guide to Enhancing Investor Engagement, and then we will move on to a panel discussion, and we have a fantastic panel today. There will be time for Q&A with the audience before we wrap up. In terms of the learning objective today, so after completing the webinar, you will be able to describe the guiding principles and practices of engaging investors on sustainability, summarize the current investor landscape and the focus areas of IR teams, and translate the experience and learnings of the practical examples that will be shared during the webinar to your work. And I'm very pleased to introduce today's speakers. We have Angus Guthrie, Director of Investor Relations from Clp Holdings Limited, Sally Fairbairn, Company Secretary and Investor Relations Director at SSE PLC, and Clio Adam, Investor Relations Director at Unilever. And you'll also be hearing from Helen Slinger, Executive Director at A4S, and myself throughout the webinar. So I'm sure you're all quite familiar with Zoom already, but we'll be using the chat function during the webinar. So you should see chat in the meeting controls at the bottom of the screen. So please feel free to post any questions you have in the chat box and we will monitor it throughout the webinar. There will be a number of polls as well during the webinar to keep the session interactive and are also necessary for those who want to claim CPD or CPE points. So in the interest of time, when the polls come up, please try to be speedy with your answers. So let's run a few polls now. So the first question is to try to get to know you a little bit. Which department are you from? So mainly from finance, but we've got IR professionals as well with us and some sustainability and others as well. So welcome to you all. And then the second question, sorry, just putting it up now. So to what extent is sustainability currently integrated into your organization's business strategy, investor communications and engagement? So we have a range of responses. So good to see some of you, the sustainability is fully integrated, but maybe some of you are just starting on your journey. So hopefully from the sharing from our companies that you'll hear from this morning, you will get some new ideas and maybe hear about some good practice examples that you can implement in your own organization to integrate sustainability further into your investor engagement. So thank you for taking part in that. So now we will move on to the first session of the webinar where I will give a quick introduction to our essential guide to enhancing investor engagement. I'm sure you would all agree that investors are increasingly interested in organizations that have strong values and are committed to operating sustainably. Just to share some recent findings from HSBC's Sustainable Financing and Investing Survey 2020, 2020, nearly half of the investors surveyed believe that they can improve returns or reduce risk by investing in sustainable businesses. And sustainable businesses are those that deliver financial returns in the short and long term in a way that generates positive value for society and operates within environmental constraints. And although it is maybe too early to say with certainty, but evidence does indicate that such organizations have fared better than their peers during the COVID-19 crisis. Nearly 30% of investors in the survey reported that they were more committed than before to considering environmental, social, and governance factors in their portfolios. And data on investment flows supports this finding as well. The survey also found that the proportion of investors disclosing the ESG characteristics of their whole portfolios increased from 24% in 2019 to 35% in 2020. And with a growing number of asset owners setting net zero targets and strengthening their ESG criteria. So combined with action from regulators, this percentage is set to increase. Also, just to share an analysis done by Moody's recently, the COVID-19 pandemic is expected to accelerate and reshape the credit trends as the relationship between ESG and investment exponentially strengthens. The pandemic has prompted debt investors to pay greater show a greater awareness of how ESG, reputational, and credit risk are intertwined. So you can read more about this in our Building a Better Future report, which was published recently. Now, the A4S Essential Guide to Enhancing Investor Engagement was published back in 2014 to provide practical guidance for investor relations teams to engage on the drivers of sustainable value. And since then, the ESG landscape has evolved significantly, and so has the approach to investor engagement. But IR teams still face many challenges in this area. So previously, perhaps it was about convincing investors that sustainability matters, and now it is about demonstrating to investors that you have a sustainable business strategy in place and that it creates long-term value and that you are managing your ESG risk effectively. So we are doing a refresh of the guide this year to reflect the latest trends and highlight the good practices of IR teams in investor communications and engagement. But the overarching principles that we set out in the guide on how you can communicate and interact with your investors are still valid. And you can see on the screen now the principles. The first one, linked to strategy. So this is about building communications around the long-term corporate strategy. Providing context by quantifying the external drivers and having a long-term focus, so putting short-term results in the context of long-term goals. Adopt a commercial tone, so you can do this by linking sustainability to revenue growth, cost reduction, risk management, or retention of key people in your organization. And integrate, this is about integrating sustainability throughout all communications, not as a standalone section. And be consistent year on year and across different communications. And use standards. So this is about using recognized standards to report sustainability performance and try to get external assurance for the key metrics that you report on. And as with all our essential guides, we have published a maturity map to help you assess what your organization is currently doing in terms of investor engagement and how you can advance to a leading position. So you will receive an email with links to the resources I've just mentioned after the webinar. So overall, before launching into investor communications and engagement on sustainability, you really need to think about how integrated sustainability really is into how your business is run. And there are a number of areas that provide a clear signal in terms of how serious you are. And they are giveaways as well if sustainability is not a core part of how you run the business. So let's hear from our speakers now on their approach to engaging investors, and learn about their IR activities and what are some of the clear signals that they give to the investors on how sustainability is integrated into their business. So I'll pass the time over to you, Helen.
Thank you, Elizabeth, and hello, everyone. So I'm delighted to be able to interview our very special panelists today. Elizabeth has introduced them briefly, but I will introduce them and their organisations a little more fully, and also invite you to pop any questions that you have in the chat function as we go along, and the team will be picking those up, and we will come to your questions when we get the opportunity further through the interview. Start, Angus, with you and CLP. So CLP is one of the largest investor-owned power businesses in Asia Pacific. They operate in Hong Kong, in mainland China, India, Southeast Asia, Taiwan, and Australia. And we have the benefit of a fantastic view of, I'm not sure which one of those, but I'm sure Angus will tell us. And their business activities range from generation, transmission, and distribution to retail and energy services. CLP's value framework sets out guiding principles for growing the company's business in an ethical and sustainable way. That framework aligns with 4 of the 17 Sustainable Development Goals, which CLP has prioritised as most relevant to their business. Back in 2007, CLP became the first Asian headquartered power company to set decarbonisation targets through the release of their initial Climate Vision 2050 statement, which was further updated in 2019. CLP has also published a climate action finance framework to reinforce the company's commitment to transition to a low carbon economy and to respond to the increasing awareness of debt investors to the climate change imperative. So Angus, delighted to have you here today. Angus is the Director of Investor Relations at CLP, and he's here to tell us a little bit more about their approach to engaging investors on sustainability. Welcome, Angus. And for just to move on to CLP, to SSE, sorry. SSE is one of the largest electricity network companies in the UK and a leading generator of renewable electricity in both the UK and in Ireland. Its vision is to be a leading energy provider in a low carbon world. To achieve this, its strategy is to create value for shareholders and society from developing, owning and operating energy and related infrastructure and services in a sustainable way. They have set 4 fundamental goals for 2030, which put sustainability at the heart of SSE's business strategy, and they are directly linked to the Sustainable Development Goals. In November last year, they published a Just Transition Plan, which will help to protect workers and communities as the UK moves towards net zero. They committed to publishing the strategy following engagement with investors at its AGM back in August. So Sally, welcome to our webinar today. We're very pleased to have you as Company Secretary and Investor Relations Director at SSE, and to talk about how you engage with investors on sustainability.
Thanks very much, Helen.
And finally, last but not least, Unilever. I'm sure everybody has heard of Unilever. They require a little introduction, but just to give a little bit more background, they sell over 400 brands of consumer goods, including foods and refreshment, home care products, beauty and personal care products. Unilever's corporate purpose is to make sustainable living commonplace. In 2010, the company launched its Sustainable Living Plan, which set out to demonstrate that growth doesn't have to come at the expense of people and planet. As the Sustainable Living Plan came to an end after a decade, Unilever has introduced its Compass, an integrated sustainable business strategy. The Compass is underpinned by multi-year commitments such as on climate and plastics, which are complemented by sustainable divisional strategies, such as plans to remove fossil fuel-derived products of carbon from its home care products. So last month, they announced plans to seek shareholder approval on the company's climate transition action plan, and they will share the action plan with investors in the first quarter this year before a vote at its annual meeting in May. So welcome Clio. Clio Adam is Investor Relations Director at Unilever and is here to tell us a little bit more about that exciting event coming up later this year.
Great to be here.
So Sally, I'm going to start with you. From your experience at SSE, maybe you could tell us how the approach to investor engagement has changed over the past few years as a result of that changing landscape that we're starting to see in relation to ESG.
Yeah, thanks very much, Helen, and thanks for inviting me along today. First of all, an admission, I've worked in investor relations at SSE for 14 years now, and I definitely think that the way institutional investors are engaging is changing. They're taking their stewardship responsibilities more seriously. They're organising themselves to work together, to challenge corporates, to change what they do and how they do it, and also how it's reported, and particularly this is in the ESG area. They are making meaningful contributions at AGMs, as you mentioned, at our own one last year. On climate in particular, they are engaging with sustainability teams directly on environment and sustainability. And I suppose the overall regulation and guidance on reporting of ESG, especially the environment bit, is increasing, as is the number and maturity of benchmark and analysis companies like Sustainalytics and MSCI. I think in practice for our teams, this is definitely a work in progress. Certainly at SSE it is. It's changing fast. At the moment, I would say the main impacts for our IR team has been that we're learning that investor engagement is not just about helping the analyst populate their financial model. Maintaining a close link with our sustainability team is really important so we can help each other to engage with investors in the right way. We also need to understand much wider range of areas that the companies like who are investing in us are interested in, like the wider stakeholder group, the diversity of workforce, directors, incentives, etc., just to name a few. I think though what has really proved fruitful for us is taking opportunities to work with the investors to develop new initiatives and further our own company strategy, which is something that perhaps we'll talk about a bit later. Mm-hmm. I think also understanding the ESG benchmark analysis is increasingly important, and asking investors which of those they use in order to be able to prioritise. So there's lots going on. It's all pretty positive though, which is probably one of the key things I'd like people to take away today.
Yeah, absolutely. But I guess there's new things. With it changing so much, there's new things for IR teams to learn and get to grips with and get comfortable with.
Yeah, exactly.
So on that strategy then, so it's clear from your purpose and your vision and your business strategy and the 2030 goals that you set yourselves that sustainability really is integrated into the business and how it's run. And that this is sort of fundamental to your communications and the engagement with investors. Now, maybe you could tell us a little bit about that just transition strategy and how investor engagement was part of the process and what influence it had.
Yeah, so this is almost like a really interesting case study in how engagement with shareholders and investors has changed. So as you heard at the beginning, we are a FTSE 100 company focused on energy markets. And over the last 10 years, we've been transitioning away from carbon intense electricity generation towards renewables and lower carbon intense generation. And we're probably about halfway there in terms of emissions reductions. Arguably, it's the next half of that journey that's going to be the greater transformation as we move more fully away from those carbon intensity. And as we know, that sort of transformation can bring about social injustice, which is one of the keys one of the things that we're looking out for and our shareholders asked us about. So that was the seed, if you like, of the just transition strategy or just transition statement that you mentioned. And I think the way it came about was textbook engagement, if you like. So two of our large shareholders, Royal London Asset Management and Friends Provident, contacted us they actually asked us formally at the AGM to do this, but they contacted us before that, and we worked with them in the run up to the AGM in order to make sure that we knew what they were asking for and we knew what our response was going to be. Since then, since the AGM in the summer, we continued to engage with them to make sure that the plan or the statement we were making was in keeping with what they were looking for. And we were very grateful that that was the way they went about it. It wasn't a confrontational piece, so it's what we talked about, what I mentioned at the beginning, the importance of learning that actually there are opportunities to work with institutional investors to actually do the right thing with them rather than be combative about it. So our investors were very influential and actually helpful in the development of it. And just this week, in my inbox, we had a request for engagement from another of our largest shareholders, Aberdeen Standard Investment, looking for a call with our sustainability team to find out more about it and how we're integrating it into our business activities, because they themselves have been doing research in this area. So as I said, I'm really hopeful this type of ongoing dialogue and sharing ideas will lead to constructive challenge going both ways to help companies and investors do the right thing.
It does sound like that dialogue is very important, and all those conversations you had before the ABM actually positioning you to be able to respond effectively to those requests. Fantastic. Okay. Angus, coming over to you. So I briefly mentioned earlier CLP's Climate Vision 2050. The updated version in 2019 set out a vision and a pathway to 2050, which laid out a transparent trajectory of CLP's own performance against the trajectory required to meet a science-based target. Maybe you could tell us a little bit about the role of investors in driving this commitment and the changes that you've seen in investor interest in your climate action over the past few years.
Yeah, okay. I hope you can hear me now, okay?
Yes, of course.
Yeah, look, it's an interesting journey, and it does actually go back all the way to 2007, and actually before then when the company started its sort of sustainability drives. But by 2007, we're able to, I think we were the first Asian headquartered power company to publish a guide towards decarbonising by 2050. And back in those days, particularly in the Asian context, that was a sort of a brand new thing. And just emphasising that a bit, I mean, you'd know that China is still building a lot of coal, for instance, but a lot of Asian countries continued on that trajectory for quite some time. So setting that out in 2007 was important. It was important because we do invest for decades, multiple decades when we make investments. And we also, very much as Sally was mentioning, around a number of those areas, we employ large number of peoples. We are an integral part of a number of communities, and we provide an essential service, which means that we aren't at liberty just to change on a whim. We have to plan these things very steadily in advance. So starting early, very important. And it's fair to say that in the early days, there probably wasn't all that much investor engagement. We actually tried a whole range of things like sustainability webcasts after we launched our sustainability report. We tried ESG breakfasts in London when we were on our roadshows in London and whatnot. And really, the engagement wasn't particularly strong. That was particularly true going back to 2009 was the Copenhagen conference, where initially we had hoped there would be international agreement on climate change. It really faltered at that stage, and then only really picked up significant initiative and momentum in 2015 with Paris. And then, of course, it's been very dynamic since that point in time, and increasing investor interest. So we are continuing to promote our climate vision. As you say, we republished it in 2019. We set out there some very specific objectives. And again, just going back to my introduction, we do have legacy positions, which means that we will not decarbonise overnight. It will take us a good long time. So the important thing for us is to be really transparent about what we are trying to achieve. So Climate Vision 2050 is exactly, the objective is exactly that. We lay out very specific decarbonisation milestones along our pathway towards 2050. we don't actually get to zero emissions by 2050, which is the target of so many areas now and is absolutely, in the long run, our goal as well. But within what we publish, we will only utilize existing technologies. And as such, there are some areas like Hong Kong where we can't completely decarbonize by that time. So again, it's about being transparent, about laying that out, about setting the objectives and how those relate to actual science-based targets and reductions. It does also sort of flow through into the social areas. So if you do look through our sustainability reports in particular and our integrated annual report, you will see an awful lot of reference there to also the progress made on supporting communities and taking those kind of things into consideration, as well as the diversity within our organisations, etc. So it really, having been doing this for quite a while, it really is a part of the DNA of the organisation. It is significantly integrated into the strategy of the company. Then as far as the investor engagement, which is actually where the question sort of started, yes, we have seen a lot of change. We really welcome the engagement side of things. There can be some organisations that simply put a threshold in place and say any company that doesn't meet this threshold of a particular activity, in our case, you might imagine it's coal-fired generation, you're out. Now, I think the difficulty with those kind of positions is people may well be in industries that have a history and a legacy of certain activities, but they are the people who are going to make the biggest change in going forward. We have very active programs to make a change going forward. We measure ourselves against those, we report those openly. And so again, if you're in a similar position to the one we are in, I would just recommend, be very clear about what the strategies are, be open and transparent, set yourself some milestone goals, report against those, keep on reporting and keep the dialogue open. Just as a last point, maybe on that investor engagement, one of the most notable things is, yes, look, over the years, there has been an increase in engagement with your active fund managers, which, is the natural course of business, and of course, particularly those who are running ESG-related funds. But the big thing over the last 3 years has really been the emergence of the same kind of issues from the large passive investors. So if you were to go back 5 years, and similar to Sally, I've been doing investor relations for longer than I'd care to mention, but I had never had an engagement with Vanguard. We'd tried to at different times, but nobody would ever respond. We now have more or less a regular engagement with Vanguard, where they will engage with our CEO and our directors as well. BlackRock, exactly the same, State Street as well. So even these really large passive funds are now making this a part of their approach to investing. So that's probably the biggest change actually over the last few years. Yeah,
and indeed, of course, Larry Fink re-emphasised his point on behalf of BlackRock earlier this week. So we can see that pressure is absolutely still there. Great, thank you, Angus. Clio, coming over to you. We can see that sustainability is front and centre in Unilever's external communications, and specifically those communications directed at investors. And you have run a sustainability event, briefing on climate action for analysts and investors in recent years. And there's a dedicated section on your website for investors that talks about strategy, governance, sustainability, amongst other things. So maybe tell us a little bit about Unilever's approach to engaging investors on sustainability and why it's such an important part of your role.
Yes, absolutely. So I should maybe start by saying, as my fellow panelists have, that the landscape's moving really quickly. So I think what we do today has moved on from what we were doing 2 years ago, and I'm sure in a couple of years it will be completely different again. But broadly, I'd kind of break it down into 3 areas. So the first 2 being more proactive, and the third more kind of reactive and ongoing. So first, we try to engage investors on sustainable businesses as part of our regular updates to the market. Sustainability is core to how Unilever does business, to our purpose as a company. So it's something that we will be referring to in our quarterly results presentations, in conference presentations, and so on. Second, we try to find opportunities to dedicate specifically to sustainability topics, such as through dedicated webcasts or events like you've mentioned. We know that what investors need and their appetite for information varies, and so this enables us to have the space to explore themes in more depth. And our aim is both to give insight, obviously, but also to create a repository of materials targeted at an investor audience, which especially covers areas that come up frequently. And then finally, there's a more reactive element of just that ongoing level of dialogue that takes place. So hosting specific meetings, responding to formal letters or information requests, and kind of having processes around managing that dialogue in a way that's effective and useful for the investors, that brings information back into the business from those conversations, while also being obviously efficient and manageable day to day.
Of course. And I mentioned briefly a little bit earlier about the climate transition action plan and the intention to have a shareholder resolution on that. I'm excited to hear a little bit more about that. That sounds new and different and a fantastic step forward. Maybe you could give us a little bit more detail.
Yes, absolutely. So as you say, we announced in December that we will ask our shareholders to vote at our AGM in May on our climate transition action plan. Our hope in setting out our plan to investors and in putting it forward to a vote is that an increased level of transparency and of accountability will strengthen the dialogue that we have with our shareholders and also hopefully encourage other companies to follow suit. Ultimately, we all know that shifting to net zero across the whole economy will require an even greater level of engagement between companies and their investors about their climate transition plans. And many of our investors also choose Unilever because of the way we integrate sustainability into our growth strategy, and they take a strong interest in this area. So we shared our climate strategy with investors back in September in a public webinar. It was well received and triggered a number of positive follow-up engagements that also encouraged us to take this next step. And it might be worth adding that as Unilever, we have a wide-ranging set of commitments in this space, but of course we all know that very long-term commitments are only as good as your delivery against them. So by putting our plan forward at our AGM, we hope that we show our serious intent and that intention to build action that matches up with the scale of the climate crisis into our strategy. And we think that an advisory vote at our AGM carries the weight to do that.
Yeah, and I'm sort of looking forward to seeing how investors respond to that as well. I think that would be very exciting. So I can see a few questions coming in for our audience. So if you keep those coming in, I've got a couple more questions for our panelists, and then we will come to you. So Angus, maybe coming back to you just quickly, if you could maybe tell us a little bit more about your approach to investor communications and wider engagement, and any recent developments that you have in IR activities, given the local market for CLP.
Look, we usually have quite an active roadshow program, but I'm afraid that's actually been a little bit difficult through the COVID-19 periods of time. But there are always ways of continuing to connect with people. We certainly do around our results announcements always include some sections on sustainability. We have an introductory pack where we have just a few slides. If we really needed to, we could only sort of start with about 8 slides and then dive into sustainability immediately after that. So that again is a sort of avenue of engagement. Just recently, we've actually launched our Clp Ir App, which is something that will hopefully give investors a very quick flick access to our website and all our investor materials wherever they are. It can be downloaded, so you can actually have it anywhere, or you can have it certainly anytime that you're connected. And interestingly enough, we have that starts off with a menu that has about CLP, and then the very second topic is sustainability. So again, just sort of driving the importance of that before you get to annual reports and presentation materials and share price and all that kind of stuff, which is also available there. So we do participate in a number of conferences, particularly during this last year. Many of the larger brokers have had ESG specific conferences, and we have participated on quite a regular basis on that. So it is just trying to use all the different channels, and maybe in a environment where we are restricted in travel through COVID, we've never really found the right social media channels, if I could put it that way, but certainly something like this IR app just provides us with a nice quick way of getting people engaged, even if they can't travel.
Of course, and I think just the way that we're using technology as well as another trend to go alongside sustainability and in the ways that you're operating within IR. Fantastic. Sally, maybe if we can just come back to you, if you can tell us a little bit about your current investor relations activities and how you guys are responding to investor interest and various questions you're receiving on sustainability. And it'd be interesting to hear how you work with your colleagues in other teams, so in your finance team and your sustainability team, and how that sort of filters through to your engagement with investors.
Yeah, okay, so a bit like Angus, we're finding that it is becoming more an area of mainstream investor questioning, so not so specialist as it was. So we are having to get ourselves up the learning curve a little bit, but we do roll out our sustainability colleagues for meetings that we think are going to be very focused on ESG. So we will do a two-pronged IR and sustainability type meeting. So that's relatively new, I would say, in the last 2 to 3 years. So and that works well because that's a way for the IR team to learn as well. When you're listening to the responses to some of the questions, it also helps the sustainability team know what their next avenue of interest is going to be. So that helps. I think most recently in working with the finance team in completing one of these benchmarks, it was the Sustainalytics benchmark. We realised that our carbon intensity trend looked really odd in the results that they published. And it was because one of the things they use for their trend analysis is a comparison of carbon against pounds million of revenue. And an accounting change in how we looked at our revenue line had distorted the results of that quite significantly. So we worked with finance and we're hoping that we have provided enough information to Sustainalytics this time for them to be able to make it a bit more comparable, but we will wait and see. So there is definitely starting to come into, I think, with things like the EU taxonomy and other things where some of the benchmarks will involve both financial and sustainability KPIs. There's going to be a lot more working together to try and ensure that there's comparability of data.
Makes sense. So having both sustainability and IR in the room means essentially everybody learns, everybody gets more information, and everybody takes away more from the discussion. Fantastic, great tip. Clio, so then very similar question. I guess, at the Unilever side of things, how do you work with other teams, and how does that impact your interaction with your investors on sustainability?
Yes. So we very much work closely with and rely on input from teams across the business. That can be our focused sustainability team, but depending on the theme or the topic, it might be individuals with sustainability focused roles elsewhere in the business, or our reporting colleagues or other teams within the finance function. Similar to what Sally was saying, I think we take a judgment call on specific meetings or topics, whether it's something that we might bring our sustainability team colleagues along for, or sometimes if it covers a kind of broad range of things that we might seek to cover with investor relations, possibly with a bit of homework in advance, depending on how difficult the questions are going to be. And then I think there are kind of two specific ways I'd highlight that I think really help us. The first being that we convene a small working group across some of the teams that I mentioned relatively regularly. And I think that helps us to keep connected on internal plans and on like external developments. So that includes sustainability, it includes treasury, it includes reporting, and so on. And then also we have a quarterly newsletter from investor relations to the key contacts that we work with and rely on in the firm, so that we can share back into the business the full picture of what we're seeing from investors and developments in the investor world. And I think that can spark kind of additional thoughts and links that might not otherwise have come up.
You mentioned briefly Treasury there. So how does that communication work between IR and Treasury, and making sure that you're saying the same, giving the same messages to your equity shareholders and your debt investors?
Yes. So I think our Treasury colleagues are finding that, as you'd expect, as with equity investors, sustainability is increasingly a topic that's coming up for them with debt investors. So in many cases, there's an overlap, and the same kind of materials ultimately are relevant for both. And this is also a space our Treasury team have been involved in for some time. So Unilever issued a green bond in 2014 and took part in the pilot project for S&P's ESG rating in 2019, which again kind of convened many of those people that I mentioned within Unilever. And as a bit of an aside, Treasury is also an area where we can try to use our scale for good. So I know that our Treasury team expect our core banking partners to share our core values as a company, and we'll work with them to talk about whether they have commitments, for example, to reducing emissions as Unilever does. So there's kind of another slant there.
Great, thank you.
Could I just
jump in? Yes,
could
please.
I just add one thing, just about the the integration of teams through the business and whatnot. Just as Sally and Clio have said, we've also done an awful lot of meetings these days that are involving the sustainability folk or the CEO equivalent of our sustainability area. But the other thing is that we actually sit next to the sustainability team. So we're not embedded in the finance group. We sit down a little corridor, and my team is on one side, and Hendrik Rosenthal's considerably bigger team, I might add, for sustainability is down the other side of the corridor. And that, of course, means that we're just talking about this kind of stuff on a day-to-day basis. So it just becomes a natural part of the way that you communicate. And I can, if anybody's struggling a bit with getting information, that's a wonderful way to try and get set up if you can.
Yeah, fantastic. So it's not just about, having those conversations, it's about physically putting yourself in the mix so there's conversations, there's coffee machine conversations happen.
Again, a little bit hard these days in a lot of places where we're all working from home, but when you get back into the office, maybe just rearrange things so that it happens.
Absolutely, we all look forward to that day. So I do want to come to our audience, so I'm just going to ask one more question of our panelists, and Sally, I'm coming to you for this one. So Elizabeth mentioned earlier the A4S Enhancing Investor Engagement Guide, and in the back of that guide we have a maturity map. And one of the indications of being in a leadership position is where the board and investor relations colleagues are confident and proactive in explaining to investors how sustainability impacts business performance. So I guess in your role as both company secretary and IR director, could you share how important that is, and how do you equip board members and the IR team to articulate sustainability in such a positive way?
Yeah, no problem. I mean, I think first of all, nothing beats having an interest in it in the first place. So I think you have to start with your appointment process and your induction process of your board members and your team. But absolutely, what our chief sustainability officer reports directly into our chief executive, so our CEO, and appears regularly at the board. The board sign off the sustainability plans each year, and actually in our strategy discussions, sustainability, particularly climate, but other things as well. So supply chain, some of the other just transition areas that we've already touched on, all form part of those strategic discussions with the board. So it's actually real. It's not just knowing, I guess it's not just knowing about it, it's actually forming some of the strategic decisions that come through, which I think helps. So it's a sort of ongoing cycle of information that helps decisions that then you can talk about to people around why you've made the decisions you've made and the targets you've set. So I think generally it's about communication though, both within the IR team, all the teams, and as I say, with the board as well. So it's making sure everybody is clear. We've also got incentive structures that actually are linked to the 4 sustainability goals that we have for our directors. So that means they take an interest too.
Definitely taking an interest when it's put in that context. Fantastic.
Absolutely.
Good tactic. So we've got a couple of questions that have come through from our audience. So I'm going to start with a great one from Estelle. Estelle, I believe, is from Zurich Insurance. So what she's asking is, during roadshows, do you find yourself talking mostly to ESG specific analysts or mainstream ones? And I guess from that investor perspective, are they just sending along the ESG guys, or does it feel like they're actually incorporating it into their mainstream investor decision making? Who wants to take that one?
Could I start just for a moment? It's always a mix for us. There are some meetings that are purely financial. An awful lot now, though, that will either many companies are integrating both together, and some companies we will actually get to, an investor professional and an ESG professional coming in. The interesting thing for me, though, was not 2020 because of the restrictions on the roadshows, but in 2019. My CEO and I, after we'd been around both the US and the UK, reflected on it and realised that in every meeting we'd had, ESG was not just mentioned, it was a topic that was addressed. So every meeting we had face-to-face with investors, it came up. Now, as a power company, you may well expect that. It is sort of central, our emissions intensity and those sort of things. But it was quite often also in the context of everything from diversity to succession planning, et cetera, et cetera. So also the S and we have quite a strong governance framework, so sometimes the G as well, but in absolutely every meeting. Sorry, I jumped in, but...
No, it was an open question. So I don't know, Sally or Clio, whether you have anything you wanted to add to that?
I would just agree with Angus. I think it's become increasingly part of ongoing meetings. I think probably helped a little bit by guidance and regulation around us all, and also the improved reporting. So obviously we are now reporting diversity statistics. We're reporting much more fully on governance. Annual reports are longer than they've ever been. So all the data is available for investors. So they almost are tempted into asking the questions because the data's there. So I think it's definitely good. It's growing and much more part of mainstream meetings than ever before.
Yeah, I just add to that I think we it felt like we saw or are seeing, as it's still an ongoing process, the buy side and the investor side moving first, and more of them either having dual roles or integrating it fully. And I think in the last year, certainly in my role, we've also seen the sell side analysts start to initiate on ESG, bring it into their kind of framework through which they're each thinking about companies. And I think that felt like it had been the lag. The investors had been moving and the sell side had been looking very much without paying attention. And in 2020, I think for us, certainly in our sector, that started to change.
And I think we've got a similar question from Diane, but just sort of digging a little bit deeper on the financial results. and how they are weighted against sustainability results. Now, obviously, you only have your own perspective. You're not investors yourselves, but do you get the sense that sustainability is actually changing the way that they make decisions as investors? It's not just that they're asking more questions. It's not just that they're showing a little bit more interest. Is it actually changing the way they do anything?
Can I go first this
Please
time?
do.
So I think I would say yes. I think a bit to what Angus has said, and our companies are actually very similar, although they're on opposite sides of the world. But I think we are seeing some investors just not investing if they think a company has bad things in it. Now, I think there's good and bad to that. I think there has to be an ongoing dialogue, and if companies are doing the right thing to reduce that, then it should be recognised. One thing, probably on the financial side, I would say for the first time, a bit to what Clio was saying, for the first time in the last few months, we've started to see, so when an analyst puts out a note on a company, it will have a target price for that company. And for example, SocGen have a 2.5% premium to our target price for our ESG credentials. Okay. And that sort of thing is new, but that gives you an indication that the financials, they are putting some value on that ESG part. So it's, that I think while it's not really telling you the percentage or quite how much, it's definitely starting to come through on the way people are valuing companies.
Great, thank you. Clio, Angus, anything to add on that one?
Clio, are you?
Sure, yeah, I think that we see it varying quite a lot from, we've heard investors tell us that they, for example, integrate one of the sustainability benchmarks into their cost of capital metric for companies, and therefore it ultimately kind of affects the target price that they'll come out at, and how much of our stock they could buy, through to others who have processes that I think are much more kind of much less formulaic, and it will be kind of taken into account, but it's hard to say exactly from the outside how those two things measure up. And I think one of the challenges, and one of the things that will hopefully help, is that the question mentions the word results, and obviously the word financial, the world of financial reporting is so established, it's consistent, it's comparable, whereas non-financial reporting is so much more nascent. So hopefully that's a space where developments will help that conversation between companies and investors.
Great, thank you. And just one final question from, sorry, go on, Angus.
Oh, sorry, I was just going to make two points quickly. There are obviously a number of frameworks. I know you have frameworks for sort of financial and ESG related reporting. We've been working very closely with the TCFD and with the World Business Council for Sustainability Development, putting together some of the prepare a forum documents for how utilities might actually respond to the TFCD reporting, etc. We also bring it into our debt, where we have something called our Climate Action Finance Framework, which is we have issued green bonds, and you can see there's a solar farm in the background there, one of our solar farms in China, but we will issue green bonds that are very specifically for financing renewables, and they are completely green, if you like. But we also put together this finance framework so that there are other initiatives which we can undertake, such as replacing coal with gas. Now, I know that's a controversial subject, but in a small city like Hong Kong, we really don't have an alternative at the moment. So our way to decarbonise and reduce our carbon emissions by half is to actually replace old dirty coal with cleaner gas as a transition towards zero. And so we have something we call energy transition bonds, which are very specifically and transparently marketed, not as zero, but as something that will help the energy transition. So those are just, again, some of the ways of sort of engaging and positioning, I guess, with investors.
Great, thank you. So I will just come back to the audience, and we're going to do a quick poll now, just to get their perspectives. So and just see how much they have been listening. So first poll, if you can just get that up on the screen now, thank you. So what are the guiding principles of engaging investors on sustainability? Fantastic. So all those answers were correct, apart from one, which didn't trip anybody up. We don't particularly want you to focus on short-term results. They are much more about the short-term outcomes of the long-term targets. So much more focused on that long-term aspect. Great. So thank you very much. So if I can just thank all our speakers. It's fantastic to hear all the different things that you're doing, and heartening to hear of the progress that has been made by investors in terms of engaging with their companies, and specifically around climate, but also much broader on other ESG elements. And if I can hand back to Elizabeth, who's just going to close out this session with a little bit more information and another poll. Thank you, Elizabeth. Thank you to our speakers.
Great, thank you, Helen, and thank you again to all our speakers. That was very interesting and informative. So if you have attended one of our webinars before, you would know that we run a poll question at the end to call for action. So let me just bring that up now. How will you translate what you have learned in this webinar to your work in the next 6 months? Great, thank you very much. So do look out for the follow-up email we'll be sending you after this webinar with the further resources. So the different reports that we mentioned, and our guide and maturity map as well, you'll be receiving links to those in a follow-up email. And please feel free to pass this on to your colleagues who might be interested. So the next webinar in our series will be on engaging the board in executive management, and it will be held on the 25th of February at 4 p.m. GMT. So for those of you who are accounting or finance professionals, you may like to consider applying for the A4S Academy program. The 2021 program is now open for application, and details will be included in the follow-up email as well. So lastly, as we run similar webinars every month, we are keen to get your feedback to help us make these useful for you. So may I ask that you complete a feedback poll before you sign off. I will leave the poll running. So let me say thank you again to all our speakers, and to all of you who have dialed in, and for your questions as well for the speakers. And we hope that you enjoy the webinar, and that we will see you again soon. Thank you very much.
Thank you, everyone.
Thank you.